If you struggle because you overthink your trading, today I'm going to be breaking down my super simple 4-step trading model that has made me profitable. And we're going to go over 2 examples that just occurred in today's market session. So without further ado, let's get right into the video. So my 4-step trading model is the STIM model, right? I use ICT concepts, and this is where we sweep liquidity, we tap into a higher time frame fair value gap, we get an inversion on our entry time frame, and then we have that happening with momentum. And I'm going to get into an example, but first of all, that kind of help you guys visualize, right? So say we have a low right here, we come down and sweep it. Now say that low right here was in a bullish fair value gap on the higher time frame. So we have swept this low. We're delivering off of a higher time frame fair value gap. Then we start to go back up, and on the lower time frame, you look for some type of inversion. So maybe on the 5 minute, the 1 minute, the 2 minute, the 3 minute. I like to use those shorter time frames because I often scalp. Although this strategy does also work for swing trading, you just got to kind of adjust the time frames up. I do have videos on that as well. But you'd want to have some type of inversion happen after you've swept out the liquidity inside a gap, and then you want to see good momentum, right? You want to see good follow through. If you have that inversion, you want to see it happen on an aggressive move up in a long scenario, right? When you've swept sell side, you want to see an aggressive move back up, invert, and then you can take longs and target whatever swing highs or external liquidity that you can find. Now, I already explained to you guys the mechanics of my model. Now, what do you want to do for your targets? Okay, well, I always like to trade toward the direction of a draw on liquidity. Now, what's a draw on liquidity? Well, I have a video explaining my favorite draws on liquidity, which is in this playlist. Check it out after this video. But in short, we had a bunch of relative equal highs, okay? And so I see that we come down right here. We have this fake out, this shakeout. We sweep this low, right? So that's sell side. We have also started to deliver out of a higher time frame gap, right? Because we have this 5-minute gap. It was on the 15-minute too, actually. So we had this 15-minute bullish gap, right? Very bullish structure here. We had this breakaway gap that was being completely respected, untouched, and we came out and swept out a low inside of this 15-minute gap, okay? So that's what told me it's a good time to go long if we get an inversion right here on this bearish impulse candle, okay? And so we came down, we swept people out, we faked out, right? So that's the S and the T, the sweep and the tap. And now you just want the I and the M, which is an inversion right here, which we had this bearish fair value gap. And then on this candle, we ended up closing above it, and there was good momentum, right? We closed at the top of the candle, so strong buyers. And then what are we on a target? Well, we can set our stop to break even at some of these internal swing highs, but the overall theme this morning was that we had a lot of relative equal highs, right? And so basically, I've already explained them, and it's just a collection of liquidity where there's a lot of highs or lows stacked in the same general area, unswept. And they're areas where price is often going to turn to and try to run all of this liquidity, right? So there's this high right here. There's this high right here. There's this high right here. And then there's another one right before it, right? So these are all relative equal highs. And my hunch was that it's a good time to go long here once we invert, because we're probably going to go up, take all of this out, including this swing high right here. If I can get the line. Yeah. So we had a lot of relative equal highs. Okay. And so market was likely to draw up there and do something like this, right? Where we take out all of this liquidity up here and then maybe continue downwards. That was kind of my plan, but I wanted to see us at least trade up here, and that's why I took the longs. And so as you guys can see, we're going to go and show you kind of what happened. Okay. So basically, we end up easily hitting all of the relative equal highs, okay? We end up taking every bit of them out. And this happened within like 10 minutes, right? I mean, we entered right here on this close at 11:44, and we got out at exactly 11:56. So it was a really smooth trade. We get a nice impulse right up to the highs right here. We hit our internal target right away, the swing high, and then we can start to target some of those overnight highs that I had talked about, right? All these relative equal highs. There's another one right there. It's just important to map these out when you see them, right? Because all overnight we had consolidated, basically. And, you know, we were kind of grinding up, but overall consolidating, and we left a ton of liquidity in this area. And that's why once we got up here, I want to target this. And we had that amazing manipulation down, right? We had this quick manipulation down. It doesn't last. Buyers show up in this fair value gap, but we take out sell side, and then we have this nice inversion and a straight shot right up to my targets. All my targets ended up hitting. And then the interesting thing about setups like this, which takes me to my next trade, is that oftentimes, once you run the liquidity, which was all of these relative equal highs, you can expect a reversal. And we actually ended up getting an entry on a reversal that occurred right after we tapped all of these relative equal highs, right? So I have my limit sells here, a few here, a few here. So I got out of the position all by the time that we hit the overnight highs, because the overnight highs are my target, right? Overnight highs and overnight lows are always areas that are important to watch, especially in a case like this where it was one of the relative equal highs. So let's now go and look what happened once we swept that out. Looks like we're breaking out of this bull flag, right? This looks like kind of like a bull flag. A lot of pattern traders would call it that. But we end up inverting at the top right here, okay? So we have this impulse move up into the highs. We take all the liquidity out, balance there for like a minute or two, and then we have this bearish inversion that occurs right here, okay? And I'll select the bar so you guys can see it. So right at this point, I'm short. Now, why am I short here? Well, because there are these imbalances lower, right? We have some 15-minute gaps that hadn't been traded into, which I showed you guys earlier. And then also, we've already taken out all of the upside draws on liquidity. So I didn't see any reason for price to continue upwards. And at this point, right, this is the sweep now. This is the sweep of buy side. So I take this short on this inversion right here because remember, we've swept buy side. We were also delivering off of a bearish 4-hour gap from quite some time ago, but it still was there, right? We were delivering off of this bearish 4-hour gap on NQ, if I can fix the chart, right? So my bias has to be bearish now that we've taken out all of the draws on liquidity and we're in this bearish 4-hour gap. I'm going to go short, right? Because once again, we've swept all the highs. So there's no reason for us to continue upwards and we're in a bearish imbalance. And so let's look what happens. So as you can see, we're in this bearish 4-hour gap, which I'm going to delete now so the whole screen isn't red. But we get in right here on this inversion, okay? And we short, and my first target is this swing low right here, okay? And we didn't end up hitting my second target, which was the low of day, but it was an amazing trade. And yeah, right here was the target. This was the swing low from that manipulation. We ended up getting a nice quick fade down. Now, once we hit this bullish 1-minute imbalance, it's always important to watch for these when you're taking a trade. So you can see right here, there was a bullish gap. Once we hit this, I set my stop loss to break even because there's a very good chance a lot of times we'll come down, hit something like this, and then get bought right back up, which didn't happen this time. And thankfully, we got amazing continuation on this short. But it is going to happen oftentimes where you'll have a good start to your trade, but then, you know, you'll tap into like a massive imbalance like this, and you'll just rip right up. So that's where I set my stop to break even. But remember, since I got in right up here and, you know, we kind of continued down, we never ended up getting a bounce off this, so that stop never triggered, and I was able to get out of most of my position right here at this low, this massive wick that was the manipulation for our first play. That was my exit for the second play, and I held a few more to try to get to low of day right here, which was the ideal second target, but it never hit, and so once we broke under this significantly, I just moved my stop on my remaining contracts to this exact level, and we end up getting stopped out of the runners right there, and we actually ended up kind of moving up. And there was another setup that I didn't catch, but that goes to show the importance of the STIM model, right? Sweep, tap, inversion, momentum. It's a free money strategy. I'm telling you guys, if you just wait for the setups to present themselves, you want to be targeting obvious draws on liquidity, and then once those draws hit, then you can look for reversals. It's pretty simple. It's pretty clockwork. I see a lot of people with the misconception that you need to have a new draw on liquidity every time, right? The second you hit your first one. No, maybe you can just play a reversal off the first draw. That first draw was manipulated up to. We get out here of our longs, and then there wasn't any specifically strong short side draw on liquidity, I wouldn't say, but it's just the fact that we hit the upside draw and price started to behave in a bearish way, and that's why I took my shorts, okay? So hopefully that video helps you guys understand my model. It's very simple. Like I said, 4 steps. You can go and back test this, right? Don't take it from me. This works very well. Back test it yourself. You know, just look for examples. Go on a higher time frame. Map out your bias. Then when we trade into those areas, right, look for any type of sweep of liquidity. So any internal imbalance highs or lows, look to see those swept. And then once you sweep them, look for any type of price characteristic like an inversion fair value gap. And you want to see good momentum. And if you can put all of that stuff together, more often than not, you're going to have a great trade. If you guys enjoyed the video, make sure to like and subscribe. If you're still watching, you're probably serious about trading. And if that's the case, also make sure to hop into my free Discord linked in bio. No credit card, no email needed, none of that. Just hop in. I go live every once in a while in there, answer your questions, share my setups, all that type of stuff. So with that being said, I appreciate you all for watching. Peace.